Bitcoin is currently retesting the 50-week simple moving average, which is currently at $24,700. That is the green line on this chart, and this is actually a very big retest because we have seen historically whenever Bitcoin was able to break back above the 50-week moving average in the previous bear markets, that did solidify an end to the bear market and the beginnings of a new bull market. And each cycle actually has a very similar story to tell, where if we zoom all the way out here, going back and starting in the 2015 cycle, you can see the 50-week moving average was support up until the breakdown, where we had that confirmation that we entered a bear market when we lost the 50-week moving average as support and we broke down right here in August of 2014. And then eventually we had a retest holding it as resistance. But when Bitcoin was able to break back above the 50-week moving average, that was the sign that we did have a bottom in place. We had reversed this bear market trend. And from there, we went off to a new bull run, repeating that same process. You can see the exact same thing here. It was support in the bull run. It flipped into resistance when we were in that bear market trend. And then when Bitcoin was able to break back above the 50-week moving average, that did confirm that the bottom was in several months prior, right here in December of 2018. And the moving average is very good at identifying that longer term momentum shift. That's why it can be useful, and that's why it has been useful in the last two bear markets. So going over to where we are today, again, we did see a very similar thing unfold so far. It was support in the bull run. We bounced off of it. We had the second bounce right here in that continuation to the new all-time high. And then when we broke down below it, that confirmed the bear market trend. We flipped it into resistance, and we're now seeing that retest. So with this, we could really go two ways. One would be the 2015 route, where if we were to have a rejection, we could actually see a retest of lows and potentially form a double bottom. You can see that first retest, we had that rejection coming back, retesting those lows. So that would be the first scenario, and that would be the more bearish scenario. The other scenario is obviously if we can just slice right through this level like we did right here in 2019, the more bullish scenario, where we wouldn't have to have multiple retests, multiple attempts to actually break out above it. Now, my view is that we do have a longer term bottom in place, so I'm going to be expecting a breakout above the 50-week moving average. And I especially think that when we're looking out here in the next few months, I don't think it's very likely that we will see a retest of this $15,000 level, primarily because this was fueled by a very bearish news event after we had already seen bearish news throughout this entire market. We had the capitulations, the liquidations, and all of that has really started to shift here. So I don't think that we are going to be seeing a sharp rejection off the 50-week moving average like we saw in 2015. But again, that is one of the possibilities, and that is certainly within the cards. It's just not my primary view. In fact, my primary view is that I do think we will see a break back above the 50-week moving average, which will once again confirm this bear market trend has ended. So especially pay attention to that into the next few weeks. Again, the 50-week moving average is right around $24,700. The weekly candle has come up and retested that. So it's going to be very important to watch out how the next few weeks unfold. If we do have a close above this, that would confirm the breakout, and that would confirm again that view that we saw from 2018 and 2019. So especially watch out to that. If we do have a rejection, then it's certainly possible that we don't see those lower lows formed or a retest of the lows, but rather we make maybe just a slight correction back down to cool off this very impressive rally from the bottom, and then potentially we have a move later on. And this would be the scenario in which we would have the rejection, but it wouldn't be as significant, as severe, and we wouldn't see that push us all the way back down to the lows. And if we do get that rejection, this is most likely what I'm going to be expecting. I think this is very logical because it would set up the price for a higher low. It would correct and cool off this big uptrend that we saw, up 60% off these lows, and naturally this would make a lot more sense. But again, the more bullish scenario is if we can just break right through it on the first attempt. So I hope you guys did enjoy the content and the analysis. By the way, make sure to check out my Twitter page. I'll leave a link to that in the description below. As always, hope you guys enjoyed, and I'll see you in the next one.